Hi, I'm Brad Rosley. Thanks for tuning in again today. Today I'm going to talk about post-pandemic financial planning. I know that we're not totally out of the pandemic yet, but the vaccines are on the way, and I'm excited about what people should probably be doing and telling them what they should be doing with the excess money that those that have saved a bundle by not shopping and not going out to eat, what they might want to do with that cash to get ahead. Let me give you 4 ideas today. 4 good ideas, okay? Number 1 is don't blow this opportunity. Pay off your credit card debt. I did a little research. The average person's got over $6,000 in credit card debt. That's ongoing balances I'm talking about that you've accumulated over time. This is really horrible. You know this, but it's not all your fault. Credit cards were created by the banks to get people to impulse buy so that they could get all that interest on those balances that aren't paid off. In my mind, it's almost like it's the devil. It's you against the devil. Leave credit cards at home. I dare you. Except for travel, let's not use them. Put money in a checking account and use a debit card. I'd put a finite amount of money in that checking account so that way I didn't overspend. Otherwise, the propensity to overspend and impulse buy is too powerful for you and most people. Otherwise, we wouldn't have the balances. And by the way, just because you don't have a credit card balance doesn't mean you don't do a ton of impulse buying. Because I know you do. You've got a house full of stuff that you didn't really need. And that's just because you make enough money that you don't have a credit card balance. I'm happy for you. But I still think you'd be better off if you got rid of the credit cards and only spent money on a debit card, or better yet, God forbid we go back and only spend cash. You want to try something that'd be really interesting? Try for the next week or two to give yourself a fixed amount of cash and put that in your purse or your wallet. And make that all you spend on dining out, groceries, whatever other expenses you may have. Because with the exception of maybe gas at the gas station or travel, no need to use a credit card. The amount of money you'll save in wasted expenses, by the way, will far out exceed the money you'd get in points for miles or anything like that. Trust me. Number 2, once you've gotten rid of credit card debt, the next thing I would do would be to increase your emergency fund. So number 2, increase your emergency fund. I feel terrible for everybody that's lost their job. It's not their fault. You didn't do anything wrong. The business you work for laid you off. You got shut down. The government shut down all kinds of businesses. Meanwhile, if you worked at Walmart or these big stores, you're doing just fine. But they shut down small business. And you might have lost your job in the process. I'm sorry about that. This is a real tough time for you. You didn't do anything wrong. Like I said, you need to have emergency savings. Everybody needs to have emergency savings. Not because there's going to be another pandemic. Maybe it's because you need to do a home improvement. Maybe you need a new furnace. Maybe your car breaks down. Maybe you want to buy a new car. Whatever. You need money for that. How much money is dependent on your job stability. Some people thought they had total job stability and then a pandemic hits. By the way, there's going to be other viruses that the governors are going to shut us down for. Trust me, that's coming. Maybe not this year, maybe it's in 5 years, but there'll be other things like that that'll come around. Now we should know better and be very well prepared financially. My next idea goes a little bit outside the box, and that is setting up investment accounts outside of your 401k. Sure, 401ks are great. I'll talk about them in a minute. But I've been doing this now for 25 years in private practice, working with clients. And what I find is almost all of people's money is in their current 401k, old IRAs that they've rolled over from past 401ks, and their house. And a little bit of savings. That's it. They don't have any other liquid money. No other significant liquid savings. That's not good planning. What if you want money to buy a second house? What if you want money to buy a car? There's a lot of things you're going to want money on. And you don't want to pull it out of your 401k because there may be income tax and or penalties you have to pay. You don't necessarily want to pull that money from savings because you need that for a rainy day. So how do you do this? Well, you can set up a brokerage account. You could set up to invest directly with a mutual fund company. You could set up a dividend reinvestment program through a company like ComputerShare. That's one I use. No matter which way you go, I strongly recommend you do an automatic savings program. God knows you're a lousy saver, and so is everybody else. We do not save as a country outside of our 401k plans. I think it's because once it gets in our checking account, we just can't stop the impulse buying. Unless we're fortunate enough to make so much money, which some people do, that they have excess that way. But that's the exception, not the rule. So how do you do it? You get the application out. There's a place in every application to set up an automatic investment program on the 10th, the 25th, the 15th, or twice a month. Have money automatically come out of your checking account into savings. In this investment account. A year from now, you'll thank me. Whether it's $50 a month, $500 a month, or some other number, whatever you can afford, do it. The way to do this, by the way, if you want to be really successful, is to automate it. That's why you have money in your 401k, isn't it? So that's the number 4th step. It's going to be the 401k. Most of you already have one if you have an employer that offers one. And as you know from the last video, I prefer the Roth 401k. The next thing I'm going to mention is to set up an automatic increase in your 401k. So once we've gotten rid of our credit card debt, number 1, we've taken care of our emergency fund, number 2, that's the foundation of our financial house. And number 3, we've set up some automatic investment programs outside of our 401k. Now let's do a 401k and increase the amount of our income that's saved automatically. So for example, there's a box you can check when you sign up, or you can go in and edit this if you already have a program that says increase the amount of my savings, say from 3% to 4%. You can also check a box in most plans that allows that to happen automatically. So you check it once, then the next year you go from 3 to 4, next year to 5, 6, 7, 8, all the way up to 10. Hopefully you'll never notice it. That way, hopefully, as you're getting increases in pay, maybe you get a 3% pay raise. Well, 1% of that pay raise, in that case, would go automatically into your 401k. So you'd still be having a net pay increase. That makes it more palatable to do this. If you've read my book, Beyond Money, you've seen that the way to success is through automatic savings. If you really want to be financially successful for someone in your income, try living on 80% of what you make. If you do that, relative to your income, you'll have a ton of financial success. That might mean you live in a nicer home. That might mean you have the choice to retire younger. That might be the ability to pay for some of your children's college, put addition on your house, do all kinds of things. It just gives you, not happiness, it gives you financial permission, because you'll have a lot more money saved to do other things. I hope you like what I had to say today, and you'll consider giving me a like and a subscribe. Ask me questions in the comments section. I'll be happy to try and answer them. I've got a lot of videos in there. I've got a book written on all this information I talk about. It's called Beyond Money. It's available on Amazon. And lastly, I've got a blog page at bradrosley.com. If you want to contact me directly, Fortune Financial Group is my business. And although I work in the Chicago area, I've got clients all over the country. So I'm happy to help you any way I can. Thanks a lot for listening. Have a great day.